Today, we will delve into Poor Charlie's Almanack by Charles Munger, and summarizing this incredible book with 5 key takeaways, and we'll provide you with practical, real-life examples to illustrate how these principles can be applied to your life. Let's jump right in. Key takeaway 1: Mental models. The first key takeaway is all about mental models. Charlie Munger believes that these models, borrowed from various disciplines, can help us make better decisions. Think of mental models as tools in your cognitive toolbox. Imagine you're a project manager facing a tight deadline. Instead of sticking to your usual project management methods, you decide to apply Occam's razor. This mental model, borrowed from philosophy, suggests that the simplest solution is often the best. By using Occam's razor, you streamline the project, cut unnecessary steps, and meet the deadline with ease. Here are some examples of other mental models, and how they can be applied in various situations. Incentives. Understanding how incentives drive behavior is a valuable mental model. When managing a team, consider how to align incentives with desired outcomes. For instance, offering a bonus for meeting specific sales targets can motivate your sales team. Pareto Principle, 80-20 rule. This model suggests that 80% of the results often come from 20% of the efforts. In project management, it implies focusing on the 20% of tasks that yield the most significant outcomes and delegating or streamlining the less impactful 80%. Confirmation bias. Being aware of this model helps you recognize that people tend to seek out information that confirms their existing beliefs. In a team decision-making process, encourage diverse perspectives and actively seek out contradictory evidence to avoid making biased decisions. Hindsight bias. Knowing this model can prevent overconfidence in your predictions after an event has occurred. When assessing the success or failure of a project, remind yourself that you have the advantage of hindsight, which can lead to unrealistic self-assessments. These mental models, when applied thoughtfully, can enhance your decision-making, whether in personal life, business, or investment. By understanding and incorporating these frameworks, you can become a more effective problem solver and critical thinker. Key takeaway 2: Value investing. Our second takeaway is value investing, a strategy closely associated with Charlie Munger and Warren Buffett. It means investing in assets that are undervalued and holding on to them for the long term. Picture yourself as an aspiring investor. Instead of chasing the latest market trends, you decide to follow the value investing approach. You carefully analyze a company's financials, assess its competitive advantage, and discover that its stock is trading below its intrinsic value. You invest in it and patiently hold on to the stock. Over time, as the market recognizes the company's worth, the stock price appreciates, and you see substantial returns. Key takeaway 3: Circle of competence. The third takeaway is the circle of competence. Munger advises us to stay within our areas of expertise when making decisions and avoid venturing into unfamiliar territory. Let's say you're a tech enthusiast with a deep understanding of the industry. You're considering starting a side business. Instead of jumping into a field you know little about, like agriculture, you decide to leverage your tech expertise. You create a tech-related service or product, where you can make informed decisions and use your existing network. Staying within your circle of competence increases your chances of success. Key takeaway 4: Avoiding cognitive biases. Our fourth takeaway is the importance of recognizing and avoiding cognitive biases. Munger emphasizes the need to be aware of these mental shortcuts that can lead us astray. Recall a time when you were house hunting. You fell in love with a beautiful but overpriced home, ignoring the objective market data. This is an example of the availability bias, where your judgment was influenced by the readily available information, the beauty of the house. By understanding this bias, you can approach future decisions with a more rational mindset, considering all available information, not just what's immediately in front of you. Key takeaway 5: The Lollapalooza Effect. Our fifth and final takeaway is the Lollapalooza Effect. This term, coined by Munger, describes situations where multiple cognitive biases or factors combine to create significant outcomes. Consider a marketing campaign for a new smartphone. Instead of relying on a single tactic, like celebrity endorsements, the marketing team decides to incorporate multiple elements. They use scarcity by announcing a limited release, leverage social proof by showcasing positive user reviews, and tell a compelling story in their advertisements. This combination creates a marketing strategy where the whole is greater than the sum of its parts, resulting in a highly successful product launch. Conclusion. There you have it, folks. 5 key takeaways from Poor Charlie's Almanack by Charles Munger. These principles aren't confined to investing, they can be applied to various aspects of life, from problem solving to decision making. If you found this breakdown helpful, please give it a thumbs up, subscribe for more valuable content, and share your thoughts in the comments below.